time. So let's have a look what happened on gold. So I want to show you some points in here. Let me just take this out, so I need to make sure you get it all right. So let's have a look what happened on gold. First thing first, you need to understand how traps works and how you're gonna identify the traps. All right. So if you go to 30 minutes time frame, you can define this as a rejection block, and it's been tested already once. And then as this one, if you get in at the first tap, you get some profits, you put your trade at risk free, and the market just tap once again to make sure you get out before the move. Okay, so you can identify this as a liquidity. Can identify this as a liquidity taken out. Perfect. And then you get the break of structure to the downside. Simple as that. So now to make sure the higher create the low, you need to see the same thing on the other side. So as you can see here, the market just swept this Asia low, and then you get the break of structure to the upside. So that means the market now are attracted to the internal range liquidity. What that means with internal range liquidity? Internal range liquidity is everything inside the range, and also a trend line liquidity. So if we from this, if we draw like a trend line, you're gonna see, sorry guys, like this. Now you know where is the traps. So first trap you're gonna get, and quite easy to see, is gonna be first order block presented. People already been in. Let's go to the 50 minutes. You can get the better one. People waiting to take some trades around here. Stop loss gonna be above. So most of the traders really interested to this level to keep selling the market to the downside, but they forget the market is attracted to the upside at the moment. Okay, so to take this liquidity out. So what happened is, if you take a trade in here around this order block, stop loss is going to be above, and you're going to target the lower prices. So that means on the top of this will be stop losses. It's going to be stop losses. That means that's how the liquidity runs. Okay, so the market's build liquidity is a fool for the market to take out. So for the market to be able to run, must swap liquidity first. All right, so if that makes sense. So you have stop losses here. Also, not only stop loss, you have buy stops as well. Okay, so pool of liquidity on the top of this. So that's the level you want to target. Also, you not just the trend line liquidity, the smart money traders here. You also have supporting resistance traders as well, interested in this level. So every single strategy meets together. Whatever strategy you use, smart money, ICT, trend lines, support resistance, head and shoulders, wherever it is, bull flags, bearish flags, whatever, is going to meet to that point always. So that's how we call a pool of liquidity. Okay, so as you know that, so the market should invite traders to place the trade, and drops to invite more, because some people only trade when the market tap into a level, then create an engulfing candle. That's a confirmation for more traders to get into a market. But you see things quite differently. So what you're going to do, you want to buy it. Okay, so you're going to buy it to take out this internal range liquidity, also as a trend line liquidity. So how are you going to spot your point to get in? So you need to go for the 1 hour to check some levels here. So here I have this rejection block here. Let me put this just to be precisely. you have this rejection block here, and also you have this rejection block here. Okay, so now you go back to the 50 minutes, and you need to look for liquidity and which one you should trust. Okay, so at this the market create highs and lows. As you can see, the market create a higher, then create a lower, and then create the higher. So everyone expected create the lower and create the higher for the ones want to buy. So that means I'm not going to trust in this one. I'm going to delete it, because this is going to be another pool of liquidity. A lot of traders are interested in this level, so I'm going to take this out. So, and my entry point should be something around here. Let me put just, I like to see precisely. Target that, stop loss below, and just something like that. 20 pips stop loss is a good trade, and also some runners to the upside. Okay, so, and some people are gonna ask, and so you're gonna put your stop loss below Asia. That's stupid. No, it's not. When the Asia breaks structure on, when the Asia is a strong high or low, it doesn't make sense the market swap them out. So these are the different things. You can see that video as well soon. We'll go to do more videos about that to share in here. So yeah, I hope you understand, guys. Make sure you follow your rules, not just get in the trade blindly. You also can wait for some confirmations to take the trade. Yeah, that's it. Thank you for watching.